Okay, let's talk about Bitcoin mining. We can look here on mempool.space, and we are currently at block 904,482, 1 minute ago, a little over 2,000 transactions. Current block subsidy is 3.125 Bitcoin, with the halving taking place in April 12th of 2028 projected, and that will move the block subsidy to 1.563 Bitcoin. We can look here. The issuance remaining is a little over 1 million Bitcoin. Outstanding supply is 19.8 million, with the percentage issued at 94.7%. We're going to hit 95% in November of 2025. When are we going to hit 99%? Let's take a look at this nice chart here. Roughly 99% of the Bitcoin supply right in here will be issued in 2030. The last 1% of the Bitcoin supply will be issued over the course of over 100 years. The last 1%. It's crazy to think about that. And once you understand that, you can understand how extremely valuable even a little bit of Bitcoin is going to be in year 2040, 2044, 2048, when the block subsidy that miners are receiving from mining these blocks is 0.09 Bitcoin. The last one whole Bitcoin will take over 40 years to be issued. That's an extreme level of scarcity that most people can't even comprehend. What about transaction fees? Well, transaction fees are making up right now 1% of the reward that miners are receiving. 1% of the reward. They mine a block. 99% of it's a block subsidy. 1% of it is transaction fees. If you look at the halving, this number has got as high as 80%. Now this is going to keep going up because as the subsidy goes down and block space becomes more demanded, then transaction fees are naturally going to go up. So we've outlined how Bitcoin is going to become extremely scarce over the years as it slowly trickles out and becomes issued. And it's going to take 40 years to mine the last one whole Bitcoin. What about actually using this Bitcoin? Well, there's only so many transactions that can fit in one block. Now, it's more nuanced than this, but we'll say roughly 2 megabytes or 2,000 transactions per block. We can see this. It can go up to 3,000 transactions or it can be a lot less. But this one's, roughly 3,000 transactions in this block, the type of transactions that are used. But for simple numbers, we'll use 2,000 transactions, we'll say, on average, that are included in a Bitcoin block. Now, we go here, and if we expand that math a little bit, there are only 10-minute average block times. One block is created every 10 minutes. There are only 144 blocks per day, 1,008 per week, 4,380 per month, 52,560 blocks per year, which means the maximum amount of transactions that can be sent in a day is 288,000, per week is 2 million, per month 8.6 million, and per year 103.6 million base layer transactions. So we have this nice chart by river, Bitcoin ownership distribution as of May 12th of 2025. We can see individuals have, people like me and you, own 68.2% of the supply. We got the businesses, we got the funds and the ETFs, 6.4% of the supply. Apparently the lost Bitcoin that will never be retrieved, 7.6%. Maybe it will be retrieved. Who knows? Governments, 1.5% of the supply. And all these publicly traded Bitcoin treasury companies have thousands and thousands of Bitcoin, and they're only going to want to buy more. They're only going to want to buy more. So what do you think happens when they want to move this Bitcoin? What happens when every major financial institution wants final settlement in Bitcoin? What type of transaction fees do you think they're going to be paying the miners who want to execute this final settlement? How much exposure do you think they will want to being able to include? We just outlined there's only 103.6 million base layer transactions that can take place in a year. How much do you think these big institutions, governments are going to be spending to have some of their transactions be a part of that 103.6 million? Well, they're going to be spending a lot. When you buy Bitcoin from someone else, you lose to a fee. When you mine Bitcoin, you gain a fee. Now, Bitcoin, we've outlined, is scarce, but so is the ability to move the Bitcoin, aka block space. It's becoming one of the most desirable resources in the world. All of these treasury companies are going for most of it. The nation states are getting involved. But how can a person, let's step back a little bit. How can a person get Bitcoin? Well, there's two main ways that a person can get Bitcoin. You can buy it from someone else on an exchange, an ATM, trade, sell a product or service, exchange Bitcoin, Craigslist, etc. Or you can mine it. You can get it from someone else, which is great, but looking at the price, you got to pay $108,000. Or you can go and get it straight from a block via mining. The average cost per kilowatt hour in the US is 15 cents, which is not profitable to turn this electricity rate into Bitcoin. Well, what about 0.08 cents per kilowatt hour? Well, let's do some math. The S21 Plus Hydro Miner, this has a hash rate of 395 terahash, 5,925 watts or 5.925 kilowatts, and 15 watts per terahash. Now, this is saying the daily revenue and daily cost. How do we get these numbers? Let's break it down. Well, the Hydro Miner consumes 5,925 watts per day, which is 24 hours in a day, 142 kilowatts per day, times that by 0.08 cents, and that's $11.38 in electricity and hosting costs to run this machine. Now, that's your cost. Your revenue, miner revenue per terahash or hash price, is roughly per day, per terahash per day, is 0.00000054 Bitcoin. So we multiply this out by 395 terahash, and you get $23 in Bitcoin per day. Now, you can exchange at the going exchange rate, $11 in fiat currency or any other currency, whatever the exchange rate is, for $11 of Bitcoin. Or you can exchange $11 for electricity and get $23 of Bitcoin. Scale that with 13 miners, and you can mine one Bitcoin in a year, $108,000 Bitcoin for $52,000. So you can get Bitcoin at a discount. What happens if the price of Bitcoin doubles overnight because 10 more nation states decide to create a strategic reserve? Well, trading your dollars for Bitcoin would now be half as effective, because what used to be able to spend $108,000 to get one Bitcoin, now you have to spend $208,000 to get the same amount. So you're half as effective. But with the miner, it would still cost $52,000 in electricity to run until more hash rate could come online and increase difficulty. Well, people say, what about the machine cost? Well, we can look at the price of ASICs, and they've gone up and down. Right now, they're low because the most recent halving, miner revenues got cut in half. But yes, a person could have bought a machine here and sold it here at a significant profit, or they could have bought it here and ran it out, and they would have mined all that Bitcoin in between, but the machine would have been a lot less valuable. Now, the thing with miners, especially right now with 100% bonus depreciation back, is you can depreciate 100% of it on the tax side, so reduce your taxes if you pay taxes, and But it can also, like, you can do that on the tax side, but it could appreciate on the value side. So if you expect the price of Bitcoin to go up, then the value of your ASIC miner, the machine, like, how valuable do you think it's going to be to own a machine that produces the most desirable asset in the world? When Bitcoin's 500K and you own a machine that produces Bitcoin, it's going to be more valuable at that point in time than it is today. So the price of ASICs can go up. And another thing to think about is these ASICs become less valuable because newer ones come out and effectively make those ones not as good and old and outdated and not as effective. And so let's take a look at hash rate. Hash rate in Epoch 2 from 2012 to 2016 went up 5.8 million percent. People were mining with computers. ASIC came out, boom, that went way up. Epoch 3 went up 7,000%. Epoch 4 went up 500%. So far, with current data, Epoch 5, 2024 to 2028, hash rate has gone up roughly 40%. So why is it going up at a diminishing rate? Now, part of that is because you can only make these chips so small. So we started out the CPU. We got a 130 nanometer chip, the 20 nanometer chip, the 14 nanometer chip, the 10 nanometer chip. Now there's companies working on a 2 nanometer chip. So you can't make a 0 nanometer chip. You can't beat the laws of physics and thermodynamics. It's not how that works. You can also look at watts per terahash. We're closing in on 0. Can you get to 0? No, you can't have zero unit of input to get 1 unit of output. That's not how it works. You got to go 30 watts per terahash, 23 watts per terahash, 17 watts per terahash, 15 watts per terahash, 13 watts per terahash. Get to 10, get to 5, get to 3. But you can't get 0 watts per terahash. So when we get to that point, then any one Bitcoin mining machine becomes the same as any one Bitcoin mining machine, and any new Bitcoin mining machine is going to be roughly the same as the older Bitcoin mining machines. It's like the new iPhones that come out, but slightly different. Make the older miners obsolete. It won't make the older miners obsolete because the new miners will be equivalent to the older miners. Now, at that point, it will be more so focused on infrastructure and electricity costs. Now, it's diminishing and you can't get more efficient than 0. Not to mention there's going to be increased competition from high performance computing and AI. There already is tariff headwinds. That puts pressure on hash rate. That puts suppressing pressure on hash rate to where it's going to be more difficult to grow hash rate than it previously was. Now, if that is the case, then how difficult do you think it will be with all these governments, all these nation states, all these publicly traded companies that want Bitcoin to push the price of Bitcoin higher? Because that's ultimately the spread for miners is the difference between the difficulty in the hash rate and the cost to mine and the price of Bitcoin. That's the spread that I just mentioned, $108,000 and 8 cents per kilowatt hour, based on what hash rate and difficulty is. So if that begins to widen, if you think a billionaire, several billionaires and several companies with billions of dollars can smash by over the course of 24 hours, how long is it going to take for the same amount of hash rate to come online, to build the infrastructure, to negotiate the power purchase agreements, to source the ASIC repair techs, to be able to keep those machines online? It's going to take a lot longer. So unless you think that Bitmain is going to release a quantum miner soon, you should be extremely bullish on Bitcoin mining. The question is, why aren't you mining yet?